It's Setup Monday here at BraveNewCoin. Let's take a look at some charts. Lots of red here today. This is a heat map across the crypto sphere. Tether slightly below $1, several stable coins. Other than Tether slightly below $1, lots and lots of stablecoin burns today, mostly non-Tether. Doge down significantly. BTC and ETH obviously down big. Ripple down big. 10% day, pretty much across the board on the red side of things. All in all, though, I'm not super concerned for the potential, the kinetic energy we've been storing since the previous top, rolling into Q4 this week with quarterly expiry at the end of the week. In general, BTC does best Q2, Q4. BTC has a terrible time historically in September, and ETH BTC has never outperformed BTC in Q4. I guess a better way to say that is ETH has never outperformed BTC in Q4. So that's all backtesting historic stuff, obviously, seasonality, almanac, whatever you want to think about that as. It still helps shape my trading decisions. It doesn't dictate them entirely, but I'm not going to ignore that stuff. And if we look at Bitcoin dominance, which I'm not a massive fan of, but we're seeing potentially a W to the bottom here, or a type of bottoming type of thing. And if we put on the 200-day moving average here, when dominance is below the 200-day moving average, which it is currently, alts are the better play. If this shifts gears in Q4, which it might, then that would only strengthen my thesis, I guess, for a strong BTC over alts in Q4. Typically how we see this is the majors have a run earlier in the cycle, and then everything else moves as rotation happens. So we may see a bounce on dominance earlier in Q4 and then waning dominance later on in Q4. Just one thing potentially to think about. Again, this isn't going to dictate my trading decisions anyway, so it kind of is what it is. DeFi Perp, just talking about alts a little bit more. This is an amalgam of DeFi coins on FTX. It's an index. It moved above the cloud, above the 50. Now it's in the cloud, below the 50, near the key June of the cloud here, this red line. The 200-day moving average is down here. It's still well within the previous range, well within the VPVR. Cloud's still green. Like, I'm not worried about trend at all into Q4. Now, if we see continued weakness into Q4 by October, mid-October, let's say, by mid-October, we will know how bearish we are versus how bullish we are. Give it one more month of sideways, one more month of chop until there's no doubt about it, because this thing's either going to be above or below. RSI is either going to be cruising negative or bouncing back positive, and VPVR is either going to hold this or it's not. I think it's unlikely we are sideways into November. Obviously, we'll continue looking at this, but I think it'll be pretty obvious. Today, we're also down big on legacy stuff. S&P down, VIX way up. Stuff that we talk about on Thursdays. Usually I'll cover that again on Thursday, but I'm not really concerned for any of this. There's a bit of an M double top concern. There's a bit of a head and shoulders concern on majors. I don't know. I'm just not super concerned in general. We've rubber banded first down, then up, and now we're rubber banding back to the mean again. So we've mean reverted multiple times here. There are definitely levels I'd prefer us to hold at around 44, 42 on BTC. But even if we don't, I don't think it's the end of the world. VIX, big up on VIX today. That's volatility on legacy markets. And like I already said, CME futures contracts rolling over this week, which we typically see volatility into that expiry. So again, I'm not super shocked here. What's going on? If we zoom way out on the BTC weekly, 50 and the 200, we're still above the 50. In bull markets, we hold above the 50 on the weekly. And then in the bear market, the absolute best buy has been anything at or below the 200 week moving average. Currently, that is probably around 20K. So let's say I'm completely wrong on Q4 in the opposite direction, and we go mega ultra bear. Even in 2014, 2015, the 200 week held. In 2018, the 200 week held. And even in Corona, March 2020, the 200 week held. So anything below there is very likely a significant buying opportunity should we delve to those depths. We're still above the 20-week SMA here, which is huge for trend historically. If you zoom way out, obviously in mid 2019 to late 2020, it was a giant sloppy mess of a non-signal as we snaked in and above and around that. But once this thing was above the 20 in April, that was it. We held above that till the very end of the trend here. And I guess what I don't want to see going into October is this like band to band retest with a move to the upside, because for me, that just is a super whipsaw jarring sentiment flip that I'd rather not go through, because that'll make you severely doubt what's going to happen in Q4 if this thing tests 29 and then bounces again from 29. Maybe it would look better with a W double bottom, but I would just rather not. Sideways here is fine. Mega ultra uber down here makes me doubt that we'd bounce from that. But bands are tightening, which to me is a good thing. If we tighten into Q4, that'll further embellish the zeroing out of momentum indicators, RSI, MACD, that sort of thing. So to see these tighten is good. When you see them expand like this, especially on log, when they get crazy wide, that's typical of a bubble overbought situations. So to see those come all the way back as we've consolidated here, mean reverted a couple times, definitely much more bullish than bearish, and or telling you momentum has reset or has attempted to reset. If we zoom in a little bit, add a pitchfork, pick 3 points, we get a rate of change, and we can massage this to make it look slightly better, but it's best we hold the midline here. Now you could also argue just a plain Jane vanilla horizontal at 42 to 44 as support. That's fine as well. But I do like how this bounced on the midline, died on the midline, and then bounced on the midline a couple times. In general, when you draw these and you don't have a lot of data, it's best to line this up to the point where it sort of fits what's going on or what has happened. And yeah, it's curve fitting. Yeah, it's early. I mean, I don't want to delve down here. I do not want to go back to this VPVR level. This really needs to hold between 30 and 40. If we do dump down there, I want to see wicks, and I don't want to see an extended staycation in that level. On the cloud, we're still above the cloud-ish. We're still above the key June. Again, I'm not, until it's October, until mid-October. If we're cruising below in mid-October, then I will be super concerned for Q4. But right now, I'm just nonplussed. It's a big whatever for me. This is how we looked on the cloud pre-2021. And, it arguably was a giant mess, but we did have a TK crisscross very early on telling you, yeah, this is what you want to see when momentum oscillators are zeroed out. The cloud did stay green the whole time, but we could very easily see some sort of crisscross happen into Q4 that looks kind of similar to this, where we had this big sell-off, we double-bottomed, ascending triangle, whatever you want to call it, and the MAs told you very, very early on that it was go time. So it's a wait and see. It's an if this then that, but I'm not concerned. ETH also still above the cloud, above the key June. This has a bigger potential for a cup and handle in the near term. Sorry, head and shoulders in the near term, but it also has this cup and handle aspect to it where it needs to hold probably 28. But that's another way of saying, yeah, if we're below the cloud into October, it's going to be an issue. It's not going to be as clear cut as holding above the cloud with a crisscross on the TK lines or whatever. I mean, we mooned so hard off the bottom that slowing down here is completely fine for me. Just I keep reiterating this, but we need momentum oscillators to reset. ETH on the weekly bands is a bit problematic because it's way up there still on the outer band. We actually opened above the band. That was the top in April. Not something I was watching at the time. I mean, we had opened above the bands previously, but something to watch for in the future, definitely. When you're opening above the weekly band, you're probably overbought. You probably are going to slow down. So we're still above the 20 bands. I would like to see a little bit tighter here on ETH, but I still think this looks fine in the long term. As long as the bands tighten a little bit, you need some consolidation, some sideways relaxation. Give people a chance to get positioned into big stuff. Into Q4, ETH BTC doesn't fit my ETH never outperforming BTC, backtesting, but in Q4. But 0.9 to 0.1 is very possible looking at this previous triangle that is still on the way to breaking up, as well as this pitchfork, as well as another potential cup and handle here since mid 2021. So nobody likes negative 10% days, but it actually makes me feel better going into Q4 that we've culled some of this leverage and euphoria a little bit. I'm sure NFTs are wrecked even more than they were a couple days ago. Volumes on NFTs were way down. Everything just needs to calm down and get boring. I mean, that's exactly how it was for BTC here, right? In October, September, October. Just boring, chop, nonsense, Bart, right? People were talking about how bad the markets looked. Yeah, it was a big bounce from the Corona bottom, but it didn't look particularly strong, you know. I mean, that's what we need to see. We need people to be unsure. We need to reset sentiment, momentum, all that stuff. Lastly, I'll just mention the EPTC fund and DeFi portfolio. I trade for Techme Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocation, all the vaults I'm in here, as well as the trades I make in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.